The Canary Capital XRP ETF just delivered one of the most impressive debut performances in crypto ETF history, pulling in a massive $245 million in net inflows on its first day. Yet XRP's price actually dropped 6.79% during the same period. This surprising disconnect between massive institutional demand and immediate price action has left many investors confused and concerned about what's really happening behind the scenes. Let's first acknowledge how extraordinary the XRP ETF's launch actually was. The Canary Capital XRP ETF generated $58.5 million in first-day trading volume, actually outperforming the newly introduced Bitwise Solana ETF and becoming the highest first-day volume ETF so far this year. Even more impressively, the $245 million in net inflows nearly matched BlackRock's Ethereum ETF debut of $266.5 million, demonstrating massive institutional interest right out of the gate. But here are the key reasons why this hasn't translated into immediate price appreciation. Nick, founder of the Web Alert, explains that while $245 million sounds massive, it's still relatively small compared to XRP's total market cap to create an immediate dramatic price impact. Additionally, the broader crypto market is experiencing significant pressure with Bitcoin losing both the $100,000 and $99,000 support levels, creating a downward tide that's pulling nearly all major assets down with it. Therefore, we're seeing a similar pattern to what happened with Bitcoin ETFs in January 2024, where the initial ETF launch created excitement but didn't produce immediate price spikes. There's also a technical factor at play. Spot ETF issuers have 24 to 48 hours before they must actually purchase the underlying XRP, creating a natural delay between institutional demand and market impact. The most important insight comes from market analyst Dusty BC, who urges investors to look at the bigger picture. He notes that XRP still trades within its established pattern and believes the recent liquidation event has actually completed the necessary correction. He expects a breakout above the current descending wedge pattern once XRP crosses the $2.70 mark. The key takeaway is that ETF impacts often unfold over weeks and months rather than hours and days. The institutional infrastructure is now in place, but the price discovery process requires patience as real underlying demand gradually accumulates in the background.